Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, big swings in Korean stocks after a South Korean policymaker suggests paying citizens a dividend using taxes on AI profits.
Plus, the largest US derivatives exchange, CME, is planning to create a futures market for computing power, one of the key drivers of the AI boom.
And SAP pushes further into AI agents across business operations with its new autonomous enterprise platform. We'll discuss with the CEO.
First, we check in on these markets, which, well, maybe for once we get a shakeout of what has been a relentless grind higher in the tech industry, and most notably some of the chip stocks, which today are the biggest fallers, having been, of course, the crescendo effect in the Nasdaq. We're up by 1.4%. It's the biggest drop we've seen since late March, Ed. And all of this is as we still have anxiety about geopolitics, and that is feeding through to inflationary pressures more broadly.
Take a look at this chart. Korean stocks took a dive on Tuesday following a Facebook post by a South Korean policymaker saying the nation should pay citizens a, quote, dividend using taxes on AI profits. The benchmark Kospi sank as much as 5%, then paired losses when the Korean government later said that was his personal opinion. South Korean shares of Samsung and SK Hynix recouped some of their losses, but still closed down around 5%. Let's get more with Bloomberg's executive editor for Global Tech, Peter Elstrom. It's the kind of story you wake up, you see it number one on the Bloomberg terminal, and you're not really surprised, but you do a double take, and you go, a Facebook post that sank an entire market. Who is this policymaker, and what do we need to know?
Yeah, it is a bit of a surprise, and there are surprising dynamics behind this post. So as you mentioned, this advisor, Kim Young-bong, posted on Facebook about this idea of an AI dividend, really a citizen's dividend because of the AI profits. Again, it was posted on Facebook. It's not official policy. The president's office was quick to come out and say that it's his personal opinion. But it's a 2,500-word post. It's very in-depth. It's actually quite philosophical. He talks about the evolution of the Korean economy, what it means for the people, what it means for citizens, how there are going to be challenges, but there are going to be opportunities too. And then he homes in out on this idea that perhaps there should be a dividend to rebuild the social foundation of the country as they go into this new era. So he's not talking about new taxes on these companies, just to be clear, on the key companies like Samsung and SK Hynix. He's just talking about how the country is going to benefit from their profits and what the country should do with those profits. And the profits are pretty staggering, just to be clear. Samsung is on track to make something like $220 billion this year. SK Hynix won't be far behind. So you're talking about $400 billion in profits from just two companies. Of course, it's not as much as you would get in the U.S., but it's much more concentrated in Korea. So the contribution to the Korean budget is going to be much more substantial. They're going to have this windfall. And so he's talking about what they should do with it.
Look, he's clicking in on a hot button topic, whether it be here in the United States, where OpenAI has been potentially suggesting ways in which there could be some sort of wealth fund created to distribute the wealth created by AI more broadly. But also there's potential labor issues, particularly for Samsung. SK Hynix has been promising profits towards its engineers and workers, but Samsung is facing a potential strike.
Yeah, that's a really important point. This is not just a Korea issue. This is really a global issue. Governments around the world are trying to figure out, what are we going to do if there is this big AI boom as we've seen so far? What are you going to do with all those profits? What are you going to do with that new wealth? You've had the billionaires tax proposed, of course, in California, too. Now, Samsung and SK Hynix have been wrestling with this issue. As you mentioned, Samsung right now is in negotiations with its labor union, which is threatening to strike because they want a bigger share of those profits, too. Again, this is not a new tax on these companies, though, if they proceed with this dividend, as we've talked about. It's more a sense of what the Korean government can do to prepare. And the big message from Kim in this whole discussion is that his government in Korea and then governments around the world need to be more proactive in thinking about how they're going to navigate this much more complex world with AI as it begins to change the economy, begins to change the workplace and employment too.
Philosophical indeed, Bloomberg's Peter Elstrom. Thanks for running us through it. Look, staying in Asia, President Trump is poised to travel to China to meet with President Xi Jinping later this week. Now, a number of top tech executives are expected to join the trip, as we told you yesterday. The likes of Tim Cook, the likes of Tesla's Elon Musk. Notably absent, NVIDIA CEO Jensen Huang, who was reportedly not even invited. Here with more is Bloomberg's chip and AI reporter Maggie Easton. So is that the case, that the invite wasn't extended to Jensen, who seems so close to the president?
Yes, exactly. That's what we're reporting here. NVIDIA's chief executive officer, the leader of America's most valuable company, did not get the invite to come to China, even though he has a lot at stake in China. And Huang is continuing to push for some sort of AI chip sale there, though this seems to be a signal that he's not going to get Blackwell sales in China anytime soon, at least from the U.S. permission side.
It's interesting, you're writing about this in your Tech in Depth today, right? That the president's priorities and Jensen Huang's priorities right now, they might not be as aligned as they have been in recent months. Just take us into your Tech in Depth.
Absolutely. So there's really a stark contrast here. If you look at the last time President Trump met with President Xi in Korea last October, Blackwells were top of mind. President Trump was telling reporters that he was going to talk to Xi about those chips. At the same time, NVIDIA was lobbying for potentially selling those high-powered processors to China. So now we're seeing sort of a reversal in Trump's priorities. The issue of AI chips has been deliberated, and it was decided that the U.S. would allow NVIDIA to sell its H200 processor, which is less powerful than the Blackwell. And it seems to be that that's sort of where the line stands. And the latest signal of that is, of course, Jensen not joining for this China trip.
It's interesting that maybe more on the focus from the Chinese leadership perspective is Taiwan. And therein lies the whole issue of supply chain and a desire to make America stand alone a little bit more in its own ability to fabricate these chips. Maggie, who do you think is going to be centered around conversation? And when it comes to Jensen, is it a big loss? Because the market is down, 0.8% on his name today?
Well, look, it's certainly not the boost that the idea that AI chips could be on the table and Blackwells could be on the table was last October. I mean, that sent NVIDIA's market cap above $5 trillion. So we're not seeing that same enthusiasm. And even for something like the H200s, it's unclear if NVIDIA will ever be able to, tally up sales from selling those to China. China could still reject those. It's possible that comes up in this meeting, though the focus is probably going to be bigger geopolitical issues, especially the war in Iran. And so it seems since AI chips are just not a focus, NVIDIA's definitely not going to get a boost from this meeting. And, they might even see some declines, as you're pointing out.
Bloomberg's Maggie Eastland, thank you very much. The melt up in chips and AI infrastructure stocks is hitting a pause today. I'm looking at the Philadelphia Semiconductor Index. It's up 140% over the last 12 months. Through yesterday's close, up 70% year to date. But today, in the moment, we're on track for our biggest drop since that last week of March. It's probably worth pointing out as well that CPI inflation accelerating in April, coming in 3.8% year on year. That has had big impact on the markets at the moment. Let's get more with Kim Forrest, CEO of Boca Capital Partners. I was talking with the equities desk this morning at Bloomberg News about a lot of these names that are really lower today, taking a pause, Intel, Micron, Intel in particular, they were kind of primed for a bit of a pullback, right? Is that it? Is that just timing in the moment? Or is it this CPI print we got this morning?
I think the CPI print is completely disregarded by the chip nation and AI because they don't care. They just simply don't care what cost things are. Or, I guess, overall, they don't care. God knows that, AMD is probably making some gains because they have a somewhat lower priced GPU than NVIDIA, and it's capable. So, cost is relative. But yes, I don't think CPI has anything to do with today's tech sell-off. I think it has more to do with just look at the gains for the year, and sometimes you just run out of buyers. Even momentum buyers can't continue. So it's probably that, as well as what happened in South Korea. Again, momentum buyers want to buy companies that are going up, and perhaps yesterday's sell-off of those memory names was enough to cool the temperature of buying chip stocks today.
It's interesting that talking about momentum, and that we've been hearing from some of the biggest leaders on Wall Street just today about whether AI is real, what the investment opportunities are, who wins, who loses. Just take a listen to Jamie Dimon a little bit earlier, Kim.
The way I look at it is that AI is real. A lot of money is going to go into it. That doesn't mean everyone who does it is going to be a winner. go back to the internet. A lot of people lost, a lot of people won. And so, in the hyperscales, will those data centers not find use? They probably will. But is it possible that some do it badly, design it badly, didn't get the right? Yeah, of course it's possible.
Kim, you've invested in the right names, some that have done incredibly well through momentum or otherwise recently. But are too many ramping higher at this moment? Will we start to see more discernment?
I hope so. And actually, we've seen some discernment with Intel coming back from, it was not only dead and buried, but it had the grass grew over its grave, right? I mean, it was gone. And yet here we are. And why are we here? I think it's the forward movement of AI development. And whenever AI came on the scene and ChatGPT captured everyone's imagination, both NVIDIA and OpenAI seemed to be like the winners, and everybody else was just going to languish. Well, technology rollouts don't really work that way. And I think we're probably in, I've been watching a lot of baseball because the Pittsburgh Pirates are actually tolerable to watch this year so far. And we're probably in the bottom of the second inning in AI. So we have a lot of road to go ahead of us.
The big calendar item this week probably is President Trump's visit to China, meeting with President Xi, and also the delegation of top CEOs, all relevant to the fields that you've outlined. What's at stake here for the technology investor and for markets this week?
Well, the U.S. and China are walking a really, really narrow line between each other, where AI is the topic. For a long time, America has been winning. But I think it feels like decades ago, whenever DeepSeek came out, maybe it was the beginning of 2025, the shiver went through the AI community going, oh my gosh, China might have something here. And while we want competition, it's the military uses of AI and the military uses of the chips that we're very cognizant of. And I think that's why, Jensen Huang didn't get the invite. They don't really want to discuss that at this point. So don't invite them. Don't have the conversation about it. But yes, AI is very much a contention between the U.S. and China. And I know that the U.S. is, U.S. first, would like to develop it and sell it to the rest of the world, but so would China. So there's going to be tension over the world of AI.
Kim Forrest, CIO of Boca Capital Partners. It's always great to check in with you. Thanks for the expertise. Now coming up, the largest U.S. derivatives exchange, that's the CME, is planning to create a futures market for computing power. Details next. This is Bloomberg Tech.
The United States is short power, we're short compute, we're short chips, and there are going to be shortages in all three, and memory, four things. I actually believe a new asset class will be buying futures of compute. We just don't have enough compute power right now.
That was BlackRock CEO Larry Fink a week ago at Milken, foretelling what is big news out today. CME and Silicon Data are teaming up to create a futures market for computing power, one of the pillars of the AI boom. Bloomberg's finance reporter, Catherine Doherty, has actually been following what Silicon Data has been doing around this for a while, and now the CME brings it because, according to Terry Duffy at the CME, compute's the new oil.
That's right. It's just another commodity that is going to be able to not just be traded, tracked, versus that's really what was the first pillar, was the index that was created. Silicon Data bringing that to investors so they could at least start to have more transparency around putting a number to what people were valuing as the price of compute technology. And now we have the ability to hedge against price moves and some of the risks that are out there, as it would you tracking oil or other commodity prices. This is really bringing this into the institutional space, and you're going to have both the tech firms and investors that are going to jump into this and build the market and grow it so that it has the actual liquidity to back it.
Catherine, I'd go even more basic than that. Futures contracts are just an agreement to buy or sell something at a later date at a fixed price. So you're either locking in that cost or you're betting in a price change in either direction. But like with compute, I think we're talking about GPUs or GPU hours, something like that. Have they worked out how this would work in the real world?
That's right. So the index is where you're getting into that detail about GPUs and the processing power. That was kind of the first step. Now with the futures contracts, as you are pointing out, this is the ability to hedge for future moves, putting a price to or really the bet of where these contracts are going to be traded in the future. So it's both looking at where is the price of these GPU processing power trading today, and where do we see it in the few weeks, months, and as it builds out, it's really going to be, it has to develop, and I think that it's something that also needs the blessing of regulators. But that is the intent, is to be able to put a price on not just where this power is trading at the very moment, but in the future.
Silicon Data, Carmen Lee, who's the founder of all this, previously a trader, was her idea to bring transparency to those who were going and trying to buy compute and just understand what one offering was like to another? Or is she really thinking that this can become a fully fledged asset class that retail investors want to get in, and more broadly, we want to sort of build up an ecosystem around it?
I do think it was all about the ecosystem. What Silicon Data and what Carmen was building from the very start was, again, one pillar to something that was much larger. And when we talk about transparency, before today, there really wasn't a big player like CME that was able to bring compute as an asset class to the market in this way. CME, as a derivatives exchange, they already have the traders. And so you might not have just the tech firms and the AI providers, the superscalers that are going to be using this to hedge their own costs, but you're bringing an entire new institutional base that is going to look at this asset class in the same way that they would oil, metals, and other things that they trade. So it's going to be kind of a mix of many different worlds that is going to build this ecosystem, this new market.
That was my next question, really, is put CME in the context of the broader derivatives markets. A next step would be, I guess, other players would make similar proposals for futures contracts on computes in other jurisdictions.
Yes, you already have seen some exchanges, some upstarts, but no one to the size of CME, which is the largest U.S. derivatives exchange, come into this space. It's very likely that we'll see other large exchange operators that will jump into this and build their own marketplace, because it's all about the more liquidity, the more trading, and the more interest that you can build, the better it is for the market as a whole. It doesn't need to be just one exchange.
Bloomberg's Catherine Doherty on a big breaking news story this morning. Thank you very much. Sam Altman is expected to take the stand today in the closely watched trial over the charitable status of OpenAI. Elon Musk has accused the startup and his fellow co-founders and Microsoft of betraying OpenAI's founding mission for their own benefit. Yesterday, we learned more about the financial gains during testimony from Microsoft CEO Satya Nadella and OpenAI's former chief scientist, Ilya Sutskever. Bloomberg's Madeleine Merkelberg is covering the case and has been there every single day. Let's start with the what's to come. Sam Altman, this is the testimony probably that the world's waiting for. What do we know at this stage?
That's right. This is definitely the high-profile witness that we've been waiting to hear from. We've heard from, at this point, all of the other major players in this OpenAI battle with Elon Musk. That includes Elon Musk, Greg Brockman, Ilya Sutskever, Satya Nadella, as you said. And so we don't know much about Altman. We don't even know what time we're expecting him to take the stand today, but there's just a few days left at trial, and he really has a lot of questions that he's going to have to answer for before the jury. I think we're going to hear him grilled on a lot of the subjects that we've covered already at trial, mainly about his relationship with Elon Musk, but also chiefly about his ouster. That's something that Musk's legal team has been making a really big big issue of. This is back in the 2022-2023 time period, and they're going through a lot of concerns that employees voiced at that time, or members of the board rather voiced at that time, about his leadership style. So I think this is going to be an opportunity for him to kind of respond to a lot of the allegations and descriptions that we've heard so far and tell his side of the story, which is an essential one in this case.
And the essential element of the story is what? To convince that it wasn't just out of greed that they were turning into a for-profit business. What is it that through Sam's leadership style that they're looking to prove one way or other?
That's right. So that's the central argument from Musk here, is that they've betrayed the founding mission in an effort to try to enrich themselves. That's why we've heard so much about how much stake some of these leaders have in OpenAI, how much money was being thrown around and made here since they've made this conversion to a for-profit. I know your viewers know that the value of OpenAI has skyrocketed, especially in recent years. And so all these folks who had equity in the very early days of making it a for-profit have made significant returns since then. Their stake has grown so much. And so I think what we've seen from Musk's lawyers is an attempt to show that Altman has maybe not been truthful to the board in the past. His motives have not always been clear. So while he may be saying one thing about his commitment to the mission, I think they're trying to have the jury ask some questions about whether he's telling the truth there and whether that's really where his motivation is.
Bloomberg's Madeleine Meckelberg. We'll let you get back to that courtroom. We appreciate you. Now coming up, eBay. It rejects a $56 billion takeover offer from GameStop. CEO Ryan Cohen describing the bid, well, GameStop, at least eBay is describing the bid as, quote, neither credible nor attractive. More next. There's a Bloomberg Tech. Checking in on eBay and GameStop shares. Well, apparently the $56 billion takeover offer from GameStop is deeply non-credible nor attractive, according to eBay itself, Ed. We have clearly something that now could become some sort of proxy battle. It could become hostile takeover where Ryan Cohen goes directly to shareholders of eBay. But thus far, a company that is worth a quarter of the company it's trying to bid for hasn't managed to convince the board.
Yeah, the offer was $125 a share, 50% cash, 50% GameStop stock. eBay's at 107. And there were concerns about actually how GameStop would come up with the financing of that offer. What happens next?
Yeah, and question, of course, all about whether or not this could remain an investment-grade company if combined. And that seems to be a key issue that our reporting shows. There are sources showing that TD offering, not enough if it's not investment-grade, Ed.
Not the end of that story. Coming up, we're going to speak with Bennett Siegel, co-founder and general partner of A-Star, about the firm's latest and largest fund for early stage. That's next. It's halftime. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Generally speaking, we're seeing technology stocks down and quite significantly. The Nasdaq 100 off by almost 2% now, and actually semiconductors and chips are the mainstay of that decline. There's two parts to it. We saw an astonishing rally, in particular in chip stocks, that as of yesterday's close were up 70% year to date. So we're taking a timeout, a breather, but the Philadelphia Semiconductor Index down almost 6% and on track for its biggest drop since the last week of March. We did get a pretty hot inflation print this morning, and our equities desk is saying in the global markets wrap that that's part of it, the halt in the rally we see in stocks, Caro. Now, Intel is an interesting case study, one of those taking a breather. It had been driven by reports of a potential deal with Apple and a strategic pivot into AI. Intel was staging a comeback, and in a blazing rally, added over $400 billion in market value in just 6 weeks. But short interest is near a 52-week high, suggesting that for some, today might be the day to bet against some momentum. Ryan Vlastelica joins us with, for once, some good timing on the piece he put out this morning. I joke. Explain the short interest piece to me. How does that work? Why would it drive the stock like this?
Sure. So as you mentioned, Intel has seen some really tremendous momentum in the stock price over the past few weeks. I think it's up more than 200% since late March. So that's a very attractive opportunity for a lot of short sellers who are expecting that this momentum will not only reverse, but reverse in a pretty dramatic fashion. Because in addition to how much the stock has moved up, the multiple is at an all-time high, over 100 times estimated earnings. So you have a high valuation stock that's already seen some pretty significant gains. It's not really a surprise that people are betting on a reversal, even though a lot of short sellers are saying when you have a company like this with so much positive momentum, so much fundamental momentum, it's very difficult to pick a top and really ride the move down. So a lot of confusion here, but certainly some people are betting on a reversal.
And they're looking pretty clever today, at least as we're currently trading off by more than 10%. What's interesting, though, is that the analyst community still think one should be buying this stock. What is it, 17 buys, only 3 sells, even though the price target is a little out of whack with where it currently is, Ryan?
I would say the consensus is a little bit more muted on Intel relative to some other big tech names. I think there's far more hold ratings than there are buys, but I do think people are warming up to this story. There was a lot of skepticism for years about will they be able to get their foundry business back at the top of the line, the industry standard. And there's been a lot of optimism that they are showing some progress on this turnaround. It was a very ambitious move. It's cost them a lot of money. There's been a lot of skepticism, but lately we are seeing very strong results. We had this report about potentially working with Apple on chip making, which would be a huge validation for the chip making business. So there are some very positive signs here. But like I said, the multiple is very high. There's a lot of questions out there, and the stock has already seen a pretty significant move.
And that's benefited the US government for one. Bloomberg's Ryan Flestelica. Thanks so much. Always great reporting. Now, let's talk about a growing number of venture firms who are pumping ever larger sums into leading startups, OpenAI, Anthropic. But our next guest is taking a different approach. Bennett Siegel is a co-founder of A-Star, which targets seed stage startups. Checks $5 million. It's just closed its third fund, $450 million in total. That's a large seed round fund, but perhaps small versus multi-stage VC fundraisers that we've seen of late. So Bennett, I'm pleased to welcome you here into the New York studio. Seeds rounds have become astronomically large in many ways. So are you doing what you've always done? Are you having to change with the times? How is your VC model looking?
Well, first off, thank you for having me. I think we right now live in a world of giants, both on the venture capital side and the company side. And we've really stuck to our craft, which is early stage investing, backing founders with an idea of raising a few $1 million and looking to build a giant of tomorrow. And we wanted a fund size that allowed us to execute on this strategy where we could be a close partner to these founders. As funds get larger, incentives shift, and they increasingly put larger amounts of capital into later stage rounds, and you see that with Anthropic and OpenAI raising many billions of dollars. We tend to start more at the ground floor and have crafted our fund and our team to be a partner to founders when it's not obvious and before the technology is clear and before the market opportunity is present.
But the size of the seed rounds, even when a product hasn't developed, I mean, you're thinking, what was it, reporting around $2 billion being raised by Thinking Machines Lab. You're thinking about Safer Superintelligence, again, a $2 billion seed round. I know Ed's going to come in with the avocados and the mangoes, but how do you stick to your knitting? Or you just you ignore those sorts of companies?
No, it's a great question. I think there's a bifurcation in the market. I think there's traditional seed rounds, which are increasingly companies started by younger founders, graduates from Harvard, MIT, Stanford. They're raising what we call a more traditional seed round of between $3 to $5 million. In many cases, they're building on top of foundational model companies. So they're leveraging the technology and the capital invested in OpenAI and Anthropic. And we've backed a number of those companies, and they build on what we call the application layer. On the flip side is exactly the types of rounds you're talking about. It's typically researchers that are spinning out of established model companies. They're raising, in many cases, could be hundreds of millions, could be billions of dollars out of the gate to go and do research and perhaps commercialize a future technology. We've largely avoided those rounds, and those rounds have been led by companies like Andreessen Horowitz and others. We will pick our spots, but in many cases, founders don't really need $500 million out of the gate, though in this capital markets environment, they're able to get it, and there are funds that will back them to do so.
Bennett, before co-founding A-Star, you did 4 years at Co2. And I imagine focused on slightly different scale and domains. But would you just reflect a little bit on the difference in your experience, what that was like investing out of Co2 versus the seed stage at these check sizes and round sizes?
Yeah, it's a great question. I think incentives do matter, and there's a reason that funds increasingly raise larger amounts of money over time. And when they raise larger quantums of capital, they tend to invest at the later stages, and they tend to focus on large dollar deployment. Coatue is a multi-stage fund. They invest venture through public markets. Most of the focus tends to be on the growth stages when there's already clear winners, and you could invest hundreds of millions of dollars in a company and look to earn a multiple on that. Where we play at the seed stage, we're investing, typically it starts out at a couple $1 million. We're backing a founder before there's an idea, before there's consensus around a market, and we're working with them to build their business. The beauty of our model is we can actually make venture type returns, and we can make 100, 200, 300 times our money, but we have to go and find these incredible opportunities early, and it takes many years for the companies to sort of grow and mature. The other aspect of our model, which is different from Coatue, is we'll continue to invest, which we've done in our best companies over time, and be one of the largest shareholders in the cap table. So it'll be much more concentrated with a handful of companies that we hope will go from inception stage to the public markets over a decade or longer.
What Caroline was referring to about coconut rounds, avocado rounds, mango seed rounds is I wrote a column a few months ago that it's pointless saying seed because in some cases the entry level is so high. But you're committed to this $2 to $5 million level. That would counter that the seed market is alive and well and true to its definition.
Look, we're going to play the game in the field. We've modestly grown fund size. We started out with a $300 million fund. We're now at fund 3 of $450 million. So we see inflation in round size. And, our goal is to partner with the best founders in Silicon Valley. So we will do what we need to do to accomplish that. That said, it's still rare for founders to raise $100 million out of the gate with no product or prior track record. That is a rare, I would say, circumstance of particularly researchers coming out of labs. Well, we've seen in other cases, for instance, with a company called Decagon, which is one of the leaders in AI customer support. It's one of the killer use cases of AI where you could replace a lot of folks in the call center functions. We co-led a seed round at a $22.5 million valuation. In less than 3 years, the company is valued at nearly $5 billion, and we've invested in every single round and worked with them to build the business. I think there are a number of examples like that where you can do a lot with less capital, and in fact, it forces discipline on the teams and the companies.
Decagon, founded by Jesse Jang and Ashwin Srinivas, I think, have been on this program. Bennett Siegel, A-Star co-founder, not enough time, but really interesting look at that earlier stage of investing. Thank you very much. Now, coming up, we're going to speak with SAP CEO Christian Klein as the company debuts its autonomous enterprise platform. This conversation is next. This is Bloomberg Tech. SAP has unveiled a new autonomous enterprise platform at this year's SAP Sapphire conference, expanding its push into AI agents across business operations. Joining us now is SAP CEO Christian Klein. Let's start by stripping away the jargon. What is an autonomous enterprise platform? And what is it that your customers can now do, Christian, that they couldn't do before?
Yeah, thanks a lot, first of all, Ed, for having me. Yes, today we launched the Autonomous Enterprise, and we have record attendance here at Sapphire, and I see only thousands of customers very excited about the Autonomous Enterprise, because we showed our customers today that while the large language models are getting better and better, they don't know anything about your business data and your business processes. And as part of the Autonomous Enterprise, there is our new AI platform. And here we are infusing the brain of every company, which is the ERP, into the platform so that the agents also not only have the large language models, but also that they have the context of how a company runs. And then on top, we had customers like H&M, JP Morgan Chase, who have proven that with these agents, you can really deliver accurate, compliant, and reliable results.
Christian, how are you showing that productivity? What sort of data, what sort of statistics are you able to show your clients?
Actually, we showed together with JP Morgan Chase that they can close the books faster now by 30%. We have shown with H&M that the turnover in their commerce shop is now better because of our personalized agent. We have shown that inventory got reduced by 10% because actually our agents work with each other, and the demand agent actually signaled the inventory agent, hey, how to optimize and how to optimize procurement. So we really could also connect the story very well from the front office into the fulfillment functions, which is the power of SAP.
I very recently spoke to AWS CEO Matt Garman, and AWS a partner of SAP's, but they are also moving into this exact domain. How much pressure are you feeling, Christian, to offer this sort of all-encompassing agentic platform? Because if you don't, someone else will.
Yeah, for sure. But look, take AWS. They're actually a great partner. I mean, Matt and I talk regularly. And because, as a matter of fact, not all data of the world sits in SAP systems. And with AWS, we are now partnering to also build a harmonized data layer. Because, of course, still agents, they can't compensate for broken data modules. And as part of our new SAP Business AI platform, we also now harmonize data, SAP, non-SAP data. And then we've infused it into the agents. So we see AWS, Microsoft, we had NVIDIA here on stage. We have Databricks, Snowflakes. They are all now joining our platform to harmonize business data. And these are the partnerships we need to deliver highly accurate AI.
Is it the accuracy that you think wins people over from worrying that you're going to lose out competition? That's the heart of where Ed's going. Like, everyone's a frenemy, but also the labs, serious competition. Yes. How do you fend off the software anxiety?
Yeah, Caroline, exactly. I guess the heart of the new platform is clearly our context layer, because the brain of every company is the ERP. I mean, we have over 7.5 million data fields in there. We have thousands of business processes, and that knowledge sits in our platform. And this is clearly how the platform also can differentiate. You can use any commodity LLM you want. People can bring their own modules, what they would like to use. But then on the platform, these agents immediately get the context what only SAP has. And that's our why to win, and that's how SAP will differentiate.
Christian, NVIDIA CEO Jensen Huang's formula or equation is very simple. More compute, more tokens, more revenues. Do you have any case studies with customers where you can say there's actual real revenues through the agentic work they've done with SAP?
Yeah, I had Jensen actually with me on the keynote today, and he clearly said he, of course, wishes us best luck, first of all, as a customer to SAP, but then second, obviously, in order to get higher consumption of compute and chips, I mean, you need consumption at the top where the real value creation happens. And that's why when we actually now can build an autonomous supply chain for NVIDIA, I mean, they see this immediately also in the hardware consumption. And this is where also NVIDIA and SAP are partnering up to build the autonomous enterprise.
Christian Klein of SAP, Sapphire event, we very much appreciate you joining from Florida. Thank you. Coming up, Ford prepares to open a new $3 billion battery plant in Michigan. But its ties to China's CATL, well, they're drawing scrutiny amid rising US-China tensions. We dig in. This is Bloomberg Tech. Ford, well, it's set to open a nearly $3 billion battery plant in Marshall, Michigan, bringing new manufacturing jobs and investment to the United States. The facility will use technology, though, licensed from China's CATL, supplying lithium iron phosphate battery chemistry, an arrangement drawing some scrutiny amid US-China tensions. This comes, of course, as President Trump heads to China this week for talks with President Xi Jinping. So joining us, we've got a roundtable. Bloomberg's auto reporter Keith Norton and senior tech editor Mike Shepard. And Keith, I start with you, because what is the relationship like between Ford and CATL? Has it been rosy throughout, the ability to build out this manufacturing site?
Yeah, CATL is in Marshall, Michigan right now, training workers, helping get this plant off the ground. It's due to open this year. It is Ford takes great pains to say it is fully owned by Ford and the workers are employed by Ford. It is just a licensing deal, but they've had a good relationship to develop these lower cost LFP batteries that are central to Ford's efforts to overhaul its EV strategy and deploy more affordable EVs in 2027.
But Mike, this relationship, though rosy, hasn't been particularly well loved by some people in Michigan, but even in the halls of Congress, right? How has this been sitting, this sharing of technology between China and US giants?
Well, in general, there has been a lot of reluctance to allow this kind of a partnership. Anything that remotely touches on advanced technology immediately draws concerns from lawmakers here in Washington who really fear the leakage of technology to China, but also the potential leakage of data and other information that could jeopardize U.S. national security. And we have seen that, of course, in the battle over TikTok. And then more recently, we have seen this in terms of legislation at the state level and even introduced here at the national level this week in Washington, aimed at restricting Chinese purchases of land and also investments in businesses here for those very security reasons. And it's important to know, Caro, that CATL itself is the focus of some of those concerns. The company in 2025 was added to this Pentagon list of companies that the U.S. government believes support China's military.
Keith, do you not have a great sense of deja vu? Didn't you and I write about a CATL licensing deal in 2023 that sections of the Republican Party then said was a Trojan horse? What's different?
Yeah, so there continues to be these concerns, as Mike is saying, about ties to the Chinese Communist Party with CATL. But here's the reality, Ed. You cannot pursue an EV strategy without dealing with the Chinese. The Chinese control 80% of the world's capacity for batteries, and that is the most costly component of an electric vehicle. CATL has half of that. So they're the battery giant that you must deal with if you want to have an electric vehicle strategy.
What that story at the time showed, Shep, and became true in the first few months of this administration was there is a scale of China hawkishness, right? Ranging from we need complete access and work with China to let's not do any business with China. And when the president goes with that entourage of CEOs in the next 24 hours, that spectrum of hawkishness will also be a part of the political story.
Well, it certainly will, Ed, and we will see that follow the delegation with the president. And these are the concerns that surround, the ability of China, for example, to purchase advanced AI chips from NVIDIA. And a notable absence, of course, as noted earlier on the program, is NVIDIA's Jensen Huang. And also the Iran conflict itself will barge into these talks and really perhaps restrain the ability of unfettered deal making by some of these companies. They'll be looking for smaller wins, perhaps, in the Chinese market. And then will come up the question, of course, of what can China do for the U.S., which is what Donald Trump has tried with other trading partners like Japan, South Korea, the European Union, encouraging them to invest here in the U.S. as part of trade negotiations. The challenge is, though, reaching some sort of a grand bargain with the U.S. would require much more complex talks on issues ranging from tariffs to market access in China, and then also the even more sensitive question of rare earths and whether China would relax its position in terms of handling the chokehold that it holds over those elements that are critical to manufacturing in so many areas, including autos, but across the economy.
I mean, rare earths is where it's at when it comes to battery technology, Keith. And I go back in many ways to market access, because with one breath, you'll hear the Ford CEO working on this relationship with CATL, and in the second breath saying, but we don't want Chinese-made cars or autos coming to the United States. So that's something that's got to be balanced.
Exactly right, because the United States is still well behind the Chinese in EV technology, maybe a decade behind. And of course, the Chinese auto industry is supported by its government, so they have lower costs. So Jim Farley, the CEO of Ford, says keep the Chinese out, but we also value our partnerships with the Chinese and we want to do more of them. So yeah, it's a very fine line that they're treading here, and they do need Chinese tech if they want to have EVs, but they also would be swamped by Chinese competition if Chinese EVs were allowed into America.
Bloomberg's Keith Norton and Bloomberg's Mike Shepard, thank you very much. Okay, before we go, let's take a look at today's big number, $135 billion. That's how much Netflix says it has spent over the past decade making films and TV shows in more than 50 countries. The stats are part of a new website called The Netflix Effect that the company is using to show how it boosts local economies. Netflix says the impact goes beyond direct employment, for instance, highlighting how South Korea, Caro, saw a 25% spike in airline bookings.
And just think, new film, Narnia and the Magician's Nephew, actually going to having a long run in theatres. How Netflix is changing the game. That does it, though, for this edition of Bloomberg Tech.
A big show ahead of a big remainder of the week. Don't forget to check out the pod. That's where you can find it. This is Bloomberg Tech.